Well, good morning, Thomas Montgomery. I'm sorry that we weren't able to connect yesterday. Travel schedules didn't allow us to get together, but most weekdays at this time, 8 o'clock Central or a minute or so before, we get together with our distribution partners. We talk tactics, strategies, tips, success stories, what's new, what's working, and fixing anything that's not. Well, today we have a very significant announcement, and it has multiple ramifications. So if you'll stick with me, we'll go through it, and then we'll answer any and all of your questions. As always, if you have questions, comments, concerns, go ahead and type it into the question and answer box like a chat box on Zoom. I'm going to zoom in, speaking of Zoom, on my screen so it is a little bit larger font, and we'll scroll down. Okay, so of course, we get together daily. Today's training is, of course, on the 5th. Our topic today is creating primary trade lines, and we're not going to just have an academic discussion about why that's important and why that'll help a lot of people access more capital. We're going to cover some basics, but actually talk about the new solution that we're rolling out today. We just finished getting onboarded ourselves about 5 p.m. yesterday, so this is hot off the presses. All right, so let's start with the overview here, and I'll make this a little larger. So what do you and I know about accessing capital? Well, you have to have at least one of the 3 C's: credit, cash flow, collateral. The more the 3 C's you have, the better. From a credit perspective, there's business credit and personal credit. You and I can help people with either or both of those. But from a personal credit perspective, how do we have strong personal credit? Well, we have good positive credit reporting showing that we're responsible for paying debts as agreed, and we have an absence of negative. So if we don't have an absence of negative, in other words, we have negative items on our credit report, we may want to look at ways to remove that so the negative doesn't show, which would make our credit scores higher and our credit profile look stronger. More relevant to today is if we have a shortage or an absence or a deficit of positive credit, we probably should be adding new positive credit. And we call those trade lines. So there's different types of trade lines. There's installment and revolving. There's primary versus AU or authorized user, which I'll get to here in a moment on the 3rd bullet. But we can't lose sight of just the basics of how do we access more capital, whether it be on personal credit, which is what we're talking about now, or business credit. We need to open trade lines, we need to pay as agreed, and we build. And that's true off of personal credit or business credit. But again, we're talking personal credit today. The second bullet is an important point. A former banker named Jeff taught me this, and you may know this, but trust me, I think most small business owners, most Americans don't understand this. When it comes to opening trade lines, size matters. And I don't say that jokingly, but what that is relevant to is let's say that someone doesn't have a real strong credit profile. So they go out and they get a $200 or $250 or even a $500 secured card from their bank. Will that help them improve their credit score? Yes, as long as they pay as agreed. It's a trade line, it's building out their credit profile, they're creating positive payment experience. All thumbs up. But when they go to apply for funding, they're going to be limited because most underwriting algorithms look at the existing credit limits that an individual or business has, and then that influences the amount of the approval. So I'm not saying that it influences approved or not, it impacts how much they are approved for. So it is a bad strategy, let's repeat together, a bad strategy to go open little bitty credit cards with Merrick Bank or these different subprime secured loan credit cards, or going and getting a little bitty secured loan from your bank or credit union. Bad idea. Will it build your credit profile and payment history if you pay on time? Of course, but it's going to reduce the amount of your further approvals because your demonstrated ability to manage credit is with a small amount, so they're going to become more restrictive. Thus, the bigger, the better. Now, there's always some reasonableness constraints, but we don't want to encourage clients to go out and get little secured accounts, revolving and/or installment, to build their credit, because while it will build their credit, it's going to limit the amount of approvals going forward. And that's true on personal and on business. All right, third bullet. As I mentioned, there's a difference between primary and authorized users. I suspect all of you know this inside and out, and you could teach anyone about how it works, but I'm just going to cover the basics just to make sure we're all on the same page. Authorized users are considered like a piggyback account. Like right now, I could put you on one of my credit cards, has a $20,000 credit limit, and bam, it would show up on your credit report right away. It'd show perfect payment history, it'd show low utilization. And you'd say, well, great, the authorized users outstanding. Often relatives do that for one another. You can go out and buy your way onto an authorized user account. Will that impact your credit score? And I'm going to give you a strong maybe, because it depends upon the FICO credit scoring algorithm. It's really a false improvement in your score because the system's too smart to trick. We're not going to trick the system. So we're not going to get piggybacked on my credit card or on your Aunt Sue's credit card, and all of a sudden everyone thinks, oh, well, I've been paying on time. No, you're piggybacking off. For some credit scoring algorithms, you'll see an immediate boost in your credit score, but it's a false increase because almost every lender, when they go look at your credit profile for approval or decline, or even amount of approval, they're going to screen out, filter out, almost ignore the authorized user account. So there's a big business. You could go sell AU accounts all day long and make a lot of money. But in my opinion, you're not treating your customers right, because in most cases, the lenders are not going to give credibility to the AU accounts. Well, if that's the case, then what are we left with? Well, we better be building primary accounts. Primary are real accounts that are opened by us, that are under our business, or in this case, under our personal credit. They're really ours. So, big difference between primary and AU. What we're talking about and what we do is not AU, because I can tell you, I've seen a lot of disappointed clients that have high credit scores and they can't get approved for squat because almost all of their credit is someone else's. It's AUs. Okay, moving on. This is kind of obvious, but if we're going to help a client add trade lines to their profile, we're doing personal profile today, then it's really valuable if it adds to all three bureaus. Now, we see different types of specialty trade lines that'll come around, and they might report to one bureau, maybe two, but obviously it's best to report to all three. You might say, well, why is that? Different lenders pull from different bureaus for approval, and sometimes they'll alternate. So the best thing that we can do for a client is help them build their credit profile by adding primary trade lines that report to all three bureaus. So we're covered regardless where the lender might look, because they might go apply for a mortgage and they might pull Experian. They might go apply for a car loan, they might pull from TransUnion. They might go apply for an SBA business loan, they might pull from Equifax. So it's best to build all three. Now, historically, people with challenged credit had limited access to sizable new primary trade lines. And that makes sense, right? If I've got a really low credit score, why in the world would anyone extend a large amount of credit to me unless it's secured? And there's a problem, because if it's secured, I typically have to put $1 up for every dollar of exposure they have. So you and I now have a solution to this. What we're talking about today is going to have two ramifications. One of which is, this is now how we can guarantee the $2,500 initial funding first tranche financing for any client, but also it can be used in a much larger fashion. So just keep in mind, this has two applications for getting the refundable deposit, the loan package funded for even people with bad credit or weak income, but it also can be used in a much broader sense. we'll dig more into that as we go. So let's move on down to the construct of the new legal primary trade lines. Our business model is ethical and it's legal and it's compliant, but because of the space we're in, we're under a lot of scrutiny. So the last thing that we're going to do is bring some solution out to the marketplace that's gray, that's fuzzy, anything that could get you or I in trouble, we're not going to touch it. So this is a legal approach at adding primary trade lines. Now, why do you might say, well, of course it would be legal. Well, there's some solutions in the marketplace that could be considered fraudulent. And this is not one of those. So just trying to clarify. Okay, the first highlight of the new trade line program, and this is a big one, the client decides the size of the trade line. Doesn't matter on their credit, doesn't matter on their income. The client gets to select the size of the trade line that will post to all three bureaus, guaranteed without question. However, the low is 300, the max is 20,000. It's got to fit within that range. Can't go below it, can't go above it. Of course, and we highlighted the importance of this before, it does report to all three bureaus. It absolutely is 100% approval. Thus, there are no minimum credit scores to qualify. There's not even a hard pull, and there's no minimum income to qualify. We have a client we were working on yesterday, over a 700 credit score, but no income. And so she's having trouble accessing capital. Well, that kind of makes sense, right? With traditional lenders, if you can't show that you can pay the bill, why would they lend you the money? Because you're almost certain to default. Well, in this case, these trade lines, no minimum credit score, no minimum income to qualify. There's no down payment required. And then the repayment terms are set up and chosen by the client. See, it's all about client choice. Client chooses the size of the trade line, and then the repayment terms can be as low as 3 months or as little as 3 months, at as much as 48. They currently won't go beyond 4 years. Now let's apply this to a real example, and we'll use the $2,500 refundable deposit that clients pay for the loan packaging, of which you get half. So that's the example we're showing. This is real numbers as of this morning. So let's say you got a client, and of course we're trying to get them first tranche financing. That's a lot of money, 5,000, 10,000, whatever they may qualify for. But let's say they don't qualify for any traditional financing, typically because of credit and or income. We see that often, right? Well, before we had what we called our safety net financing, 0% interest, low $100 payments. But the problem with that was the payments were weekly. People hate weekly payments. So now we've gotten away from that. So now this will allow, regardless of the creditworthiness or cash flow, or regarding cash flow, of course, some people have W-2 income, some have 1099, but regardless of the barrier getting traditional funding, this will work with 2,500. We're working with a third party. So this is not internal financing. So we don't get to make the rules. So the lender charges a setup fee, which part of that is in fact the first payment that goes towards the principal, of course. And then this is what their monthly payments would be. So think about this for a second. If you have a client that wants to enroll in the access to capital, I'm assuming you're a white label partner, so you determine the terms. Normally the refundable deposit is $2,500. Frankly, you could make it more or less, but ignoring that for a moment, if you chose $2,500, and let's say that their circumstance doesn't allow them to get funding anywhere else, we've got 100% guaranteed financing now for that. They would have only 140 upfront, which includes 107 of the principal, plus they have like a $30 setup fee. So this amount can be $2,500 which is creating a new trade line that's going to report on their credit, allows us to build their loan package. And if they want a larger amount, it can be a larger amount. And I see Tyree's asking, these are installment accounts. These are not revolving. They're installment because they have a specific payment plan and a specific term. So these are installment accounts. Okay, so it's great income for you because for every trade line that we issue, you get 50% of. This is not too good to be true. You get literally 50% of. So let's say that we did this trade line for a client to cover their loan package. How much do you get? 50% of that, 1,250. Let's say that the client said, well, I want a bigger trade line because I want to increase the strength of my credit profile so I have a larger borrowing capacity going forward. And you say, okay, how about we set it up as a $20,000 trade line? That's going to show really good on your credit report. And they say, fine. So then we set it up as 20,000. How much do you make? Half of that, 10,000. So I don't know that you can beat a 50-50 split based upon the amount of the trade line. What are the action steps? And I'll summarize and then we'll get to your questions. What are the action steps? Obviously, first you want to get set up as a white label partner. It's free and easy. You do that right here. Take you 2 minutes to do it. Had 2 of you do it just this morning. Welcome aboard. Then on that same page is where you submit, there's some training you probably should view, and Scott Stroud's our chief marketing officer, and he's here to support you, but ignoring all those details, then you'll submit each client on the same page, and then we can issue a proposal. So it's going to always be a written proposal that is submitted to the client for their choice. And so we'll need to know when we set up the proposal, the recommended, well, not the recommend, but the dollar amount of the trade line that they want. So we need to know that to set up the proposal. By default, it's usually $2,500, right? For the refundable deposit, can be more. But then when it goes to the client, they can pick the repayment terms. And then they can pay by credit card or by ACH. And the payments are monthly, and they get to pick the day of the month that the payment comes out. I mean, we've just taken this from a B- level program to an A+ in terms of being able to help clients get their first tranche of funding regardless of what baggage they bring to the table. Huge, huge. And that's the bottom of the page. So I'm going to make it smaller so we can all see the entire page. And then we're going to dig into your questions, comments, and concerns. So Tyree had the first question a few minutes ago, and I kind of answered it subtly, but it is installment. This is an installment model, not a revolving model. Thank you, Tyree, for clarifying that. This is off of personal credit. We add trade lines on the EIN for business credit differently, and we'll be talking about that in a different training. But this is personal primary trade lines that we're talking about today. Thank you, Samuel, for clarifying that. Okay, who else has questions, comments, concerns? I'm going to recap while you're formulating those. Why is this a really big deal? 2 reasons. The first of which is, as you're out as a white label partner, bringing on access to capital clients, we can always now get them funding for their first tranche quickly, regardless of credit score, regardless of time in business, regardless of income, if we have to, using this model. And this model rewards them, doesn't it? Because it helps them build their credit profile so they have better borrowing capacity in the future. It reports to all 3 bureaus. They can select the credit line so they can get a bigger credit line if they want an even stronger profile. And they set the repayment terms. They set the day of the month they want to pay back. They set if they want to pay by credit card or ACH, and they can switch it. Got a professional team of billers that's handling it. I mean, it is exceptional. Grade A. All right, so Anna Marie says, this is awesome. I agree. And this has been churning for a while, but it takes time to build new components to the programming. This one has been built, and we're live. We've already started submitting clients today. Bruce, you're online, and one of your clients we already submitted in today. Jeremy asked about a flyer. Well, that's a good question. I guess we could look at that. This wasn't really designed. This isn't a standalone offer, right? So what you're doing is, as a white label partner, and if you're not one, you can become one easy and free here. What we're doing is helping your white label access to capital or capital ready clients get a minimum of 100,000. And this is one step on that journey. So that's a great point, Jeremy. We hadn't envisioned developing a separate flyer for this, but maybe we should. We could certainly consider that. It's part of the implementation process is what I'm saying. And it's frankly not a burden on you. We will be able to determine from their soft credit pull that happens after you submitted the client where we should go and if they would be a good candidate for these primary trade lines. Mark's asking a good question, and there's a calculator that I'm not logged into now. It's like a back office. So what we showed here is accurate. I ran these numbers this morning in preparation for our training, but I have not ran other scenarios. So I don't know the answer to different amounts offhand, but we can create proposals for any client and give them the option. Okay. LJ asked a good question. How long does the process take? Well, for instance, Bruce, who's one of our white label partners, submitted a client yesterday. We saw it yesterday, but we didn't run it till this morning. And then we were able to issue a proposal to Bruce's client this morning. So, I mean, once we see it, once we get to it, then we can issue a proposal to the client, in 5 or 10 minutes. So it's quick. Magnus says, I'm not sure how the $2,500 deposit features in the application process. Well, I don't understand your question exactly, Magnus, but let me summarize. So when clients enroll in the Access to Capital program, there's no upfront cost. People will debate this with me, which is interesting, but there's no upfront cost. What we say instead is, hey, there's a refundable deposit that's going to cover the development of your loan package, which is needed, of course, business plan, financial projections, all that, but we won't even invoice you for that until after your first capital raise. Well, different people get their first round of capital different ways, but some people don't have much availability of capital right away because of problems. Maybe they have problems with their credit, maybe they have problems with their debt revolving utilization, maybe they have problems with demonstrating income, maybe they just don't have any income. This supersedes any of those barriers to getting them the trade line. So Magnus, hopefully that answered your question, put it in perspective. Okay, so Helen's asking, from an implementation perspective, let's dig just a little bit deeper. So obviously what you need to do first is become a white label partner. Oops, if you're not, Helen is. So check that box. Next, Helen needs to submit in clients through the white label portal, which she's obviously been doing and will continue to do. What's not outlined here, just for simplicity, is then we set up that client, which means we send an email to the white label partner, in this case, Helen, and it has 4 data points or 4 elements. It has the client's name, client's email, access to the business plan software, and access to the Dropbox, which is where the loan package documents will go. What the white label partner, in this case Helen, knows to do is to go get the soft credit pull done on that client as soon as possible. Didn't cost them anything, didn't commit them to anything, didn't impact their credit score. Well, when that soft credit pull is authorized, then we're able to look at it and say, okay, where should we go for their first tranche of financing? And it could be very different for different people. This is an option for those that would not get approved otherwise, and or those that just want a really big trade line. So hopefully that answered your question, Helen. Ultimately, we'll be implementing this week on those clients that have not been approved for funding thus far. So Charles is clarifying. So if he yes, sir, he's asking, because it sounds too good to be true, but it's good. So Charles is asking, so if he issues a $10,000 trade line, he gets 50% of that. He's going to get $5,000. If he issues a $20,000 trade line, he gets $10,000. So you're right, 50%. Barry asked a good question. Are there prepayment penalties or fees? I don't know the answer to that question. I don't think it came up in my onboarding. I'll have to check. I'm not eluding your question. I'm not sure. Samuel says game changer. I agree. This is so valuable for two reasons. And again, I'm just going to reiterate, it's redundant, but it's important to capture. Now you can feel comfortable bringing any client into the Access to Capital program, regardless of their baggage or their challenges or however you want to spin it. And we can definitely get them their first tranche of financing quickly. And it's not going to be the old model, which was 0%, but it was weekly payments. People freaking hated weekly payments. They hated weekly payments. Now not, and it didn't report to the bureau. So now they get to pick the credit line size that they want, reports to all three bureaus. Everybody is approved, flexible terms, and 50-50 split with you. I agree, Samuel. It's a game changer. And yeah, Doug, yeah. So 50-50 split, Doug, you got it. 50-50 split. Okay. George is asking a question, how long it reports. They report every 30 days, which is the way most credit issuers do. So just depending upon the time of the month that they are applying and opening this, but within 30 days, it'll start posting on their credit. And that's a big deal, right? Take someone, here's another application. I think it's what Georges is hinting towards. And I don't think I picked up on it until just now. Let's say you have a client and the client's name is John, and John has high revolving utilization. What is a way to dilute utilization? Opening more trade lines. But okay, so let's move back to your questions. Got a bunch of them. Regina says, outstanding program, a remedy to 1 million of people. Yeah, and it's available in all 50 states. So that's good. And that's a great point, because there are some lending programs that are not available in all states, but this is. Andrea's clarifying, can our distribution partners use this as well? Absolutely. And then that was LJ's question pretty much. Yeah, if you're interested in moving forward with this and just proactively, you can just send me an email and then we can set it up a little quicker. If you have clients that have been declined previously, we'll be working through them here in the upcoming days. But if you want to move any of your clients to the front of the list and or yourself, just send an email and we'll prioritize you this week. And Helen, yes, your client WJ for confidentiality would be a perfect fit for this. Kevin's asking about upfront cost. Yes, there is an upfront cost, and that's what we're disclosing here. So let's take Kevin, and let's say you've got a client and they're wanting to use this for funding their refundable deposit for the loan package, and they want $2,500. They will have, not paid to you, not paid to me, but paid to the lender. There will be an upfront cost, and then this is their monthly cost thereafter. So, and Kevin might debate, and he wasn't, but he might say, well, you said there's no upfront cost for this access to capital program. Well, there's not, but we can't affect what the lender charges. So if the lender has some initial fees up front, then that's what the lender is extending to them. That doesn't mean that we're deceitful or are changing what we said. We didn't suddenly make an upfront cost to our program, but if the type of funding that they qualify for has $140 upfront cost, then that's what they charge. And of course, the client doesn't have to accept it, but you and I can't change that. I'm not getting any part of that. You're not getting any part of that. That's just the cost of getting the trade line. Mark asked, do we get to choose the terms and the date of monthly payments? Well, I want to answer that correctly. When the proposal is sent, which we'll create the proposal when you tell us to for your white label clients, then they will be able to choose the terms and the date of payment. But so the answer, if you're asking from a client's perspective, Mark, the answer is yes. If you're asking from the referral partner's perspective, or even our perspective, no, it's the client that decides that, not you or me, which makes sense because it's the client's account. Doug's pushing a little bit, which is fine. 100% approval. Well, it's 100% approval regardless of minimum credit score and minimum income. They do have to, of course, be able to validate who they are, because there's not a lender in the world that wants to lend money to terrorists or people that are not who they say they are. So they have to verify proof of identity, of course, typically done with a driver's license, but there's not any minimum credit underwriting or minimum income. So I don't want to misperceive and you hold me responsible. So if someone says, well, I want 20,000, but I'm not going to fill out anything, they're not going to get approved, right? I mean, that sounds kind of obvious, but as long as they'll complete the application, which includes providing a copy of their driver's license for proof of identity, then they're approved. It's not contingent upon credit or income. Great questions. LJ asked a good question, and I was thinking about that this morning, but I hadn't checked. I believe the answer is yes. LJ's asking, can one client get more than one trade line? And I think the answer to that is yes, but I'm not sure. I'll have to check on that. Again, we just started rolling it out kind of yesterday, but first clients enrolled today. Helen's asking, can this be used standalone? Well, technically, it was designed for our access to capital and or capital ready clients. Could we use it outside of that? We certainly could, but it was designed to be a resource to help our clients position themselves for the 100,000 or more capital raise. All right, lots of great questions. Wayne's asking the cost of the 20,000 trade line. I think someone else asked that. I don't know. There's a calculator or our back office I have to go through. I did prepare for today's call with the 2,500, which is the most popular amount because it's what's needed for the refundable deposit for the loan package. I don't have committed to memory, nor did I run all the other scenarios from 300 to 20,000. So I'm not sure. Okay. Jeremy asked a great question. Can the driver's license be expired, not current? I'm going to go out on a limb and say that they're probably expecting the driver's license or proof of identity to be current, but I don't know, but I would assume they want it to be current. Because what they're trying to do is protect themselves. I mean, they're a lender here, right? They get exposure. They want to know who it is that they're extending credit to. All right, there's been almost a million questions. Let me see if there's any others I need to hit before we leave. Some of them are repeats of what we've already talked about. All right, so Doug asked, does the client have to fully complete the loan package prior to this first tranche? No, it's just the opposite of that. The first tranche is before they even start the loan package, because we don't build the loan package until they paid the refundable deposit. So this is often used, not exclusively, but often used as the first tranche of financing. So this comes first before the loan package. I'm glad you asked that, Doug, because I thought that was clear, but that's good that we brought that up. It'll show as an active, Mike's asking, yeah, so it shows up on all three bureaus as an active account in good standing. Janice asked about so the different terms, again, several of you have asked similar questions, and we'll just have to go through. These are the terms specifically for the 2500, which is probably going to be the most frequent that you and I will use because it's covering the refundable deposit. But if the client wants a larger trade line to be able to have higher borrowing capacity in the future, we can raise that from 2500 up to anything up to 20,000. And then, as several of you asked, yes, whatever that amount is, you get half of. All right, so I think I covered it, and I'm running a bit long, but if not, we'll regroup tomorrow, of course. So closing out, in summary, we're here to help small businesses access capital. There's a process that we need to go through to be able to access capital, and that means meeting the eligibility criteria of the lenders if we're going after debt, or of course we could do equity or earned income. Personal credit is not required for accessing capital, but it's a smart thing to have, and it certainly helps. This is a new arrow in your quiver, a new tool in your chest to be able to help clients that are in the access to capital and or capital ready program be able to build trade lines, fund their loan package, etc. Your action steps are summarized here on the bottom. Super simple. If you're not a white label partner, it's a great time to become one. Free and easy. iimfl.org, white label. There's some training on there. Watch that. We'll get you plugged into Scott Stroud, our Chief Marketing Officer. We'll get you trained, supported, get tons of free leads. It's all there for you. Then as you submit each client, they submit it on this same page. There's a submission form, but there's training for you on that. And then for those clients that either look to qualify, or let me restate that look like they would benefit from this, then we will check with you and see if you'd like us to issue them a proposal. And then of course, we would know who the client is. We would just need to know from you, how big of a trade line would you like the proposal to be? And it can, often it'll be 2,500 to cover the refundable deposit, but we can ramp that up all the way to 20,000. And again, whatever that amount is, you get half of. All right, so there's probably some other questions I didn't get to, but we're running along. So thank you so much for your time and your attention. This is a really big deal. Hopefully I did an adequate job of explaining it. There's not a lot you need to do other than making sure that you're a white label partner. If you're not, take care of that. If you are a white label partner, submitting clients. And if you have a client that's already been submitted in that you think that would be a good fit for this, just drop us a quick email and we'll prioritize them. Thanks, everyone. Great to talk to you. Have a great day. See you tomorrow morning.